Hello, hello. Those of you that are here, welcome to the webinar. We're going to get started in just a few minutes, so sit tight. We have a lot of great content for you guys today. So just a few more minutes until we get started. Just about 2 more minutes until we get started here. Welcome so much to the webinar. Excited to have you. Just a few more minutes till we get started. One more minute, just one more minute. All right, everybody. Thank you so much for attending our webinar today. We have some really, really good content planned, especially in regards to retirement products, IULs, and products that you could use. So I'm really excited to have you here. Before we get into anything, I do want to talk a little bit about Penny. Penny is a nationwide life insurance brokerage, and we're known for all of these things here: high compensation, unique products. We have a free CRM for life insurance agents and agencies. We have the top rated eApp tools for free IGO, Firelight, quoting. We have an app fulfillment team, a case management team, policy delivery team, and we have the best in class underwriting and illustration support. So a lot of really good stuff. But before we get onto the main show, I do want to show you guys a little bit of the CRM that you guys can get access to if you want to towards the end of this call, just by contacting our presenter, Matt. So I wanted to show you this page. This is called Insurio. And Insurio is really cool because it is a life insurance CRM that is made by life insurance agents for life insurance agents. And there's a million super cool things that it could do that you can have access to for your clients. So I'm going to show you just a few. Once I log into Insurio, there's like a bunch of really, really cool features here. The first thing that I always try to show people is that any carrier that you would want access to that is relevant and top tier, you can have access through Insurio, not only with quoting, but also with e-apps. So if you want to quote Banner, Protective, AIG, Fidelity, so on and so forth, you're able to do that and submit the app directly into here, which is awesome and a big deal. The second thing I always like to show people when it comes to this custom CRM by Penny is the fact that we have marketing templates that are pre-built and that are known to work because a lot of different agencies use them. So what does that mean? Let's say that you are a new life insurance agency and you are doing a life insurance lead campaign and you get 20 leads in from whatever vendor. These leads get inputted into Insurio and they get added a specific tag which will allow for them to automatically receive 5 to 10 emails over the course of 2 months that were pre-built by experts. And so what's happening is, let's say you talk to the lead and they don't buy from you the first time, and they answered an ad on mortgage protection. Well, over the next 2 months, they're going to get mortgage protection information that is valuable, an opportunity to get quotes. They're going to get a little bit of information about you. And by the end of that, these people are going to be calling you and asking you to do business. So it's something that is really, really important for agents, because most agents just kind of call their leads and then, a few months later, the leads are cold. They may or may not remember to call them. This does that automatically for you. And I just want to emphasize, all you got to do to access this is work with Penny. Now, the last thing I wanted to show you, really, really interesting and important for life insurance agencies, I would say, especially those that have a bunch of people underneath them, downlines or so. A lot of times when you're new into the industry or you're established, but you didn't want to put a bunch of money into marketing, you want a website. And what I noticed that a lot of people do is they'll go onto Wix.com and create something a little bit hodgepodge. To me, that is something that I don't like doing. And what's cool about Insurio is that every agent that's on this platform automatically gets a pre-built website that is connected to them for quoting, for emails, for scheduling. Really, really cool. So I came to the link section of Insurio and this auto-generated link came on. This is customized to me, so I'm going to click on it and show it to you. But on top of that, you can actually put in different logos and different brands for downline agencies or agents beneath you that represents them as well. So it's completely customizable. Once I click onto here, go ahead and go on here. This is the web page that's automatically downloaded for you. So imagine being somebody who is marketing on Instagram or Facebook or what have you, or maybe being somebody new into the industry, you don't have a website. Well, this site will automatically generate it for you. And it's a full-fledged website. You scroll down, there is good content. It looks modern and sleek. The carriers that you would want to work with are here. There's a FAQ. And all of the products that we offer are represented here. So if your client is getting on here and they're clicking around, you might generate an annuity sale. You might generate a disability sale, a long-term care sale without even trying. And guess what? Penny can actually help you close that sale. So to reiterate, every agent, when they come into the system and start working with it, automatically gets a website generated. And that's a huge time saver for agents and agencies. If you have any questions about any of the stuff, that's the 3 that I wanted to show you, please reach out to Matthew. His information is right here. He'll be sharing it throughout the presentation. And now with that said, I'm really, really excited to introduce Matthew, who is going to be showing you the topic at hand. Matthew, I'm going to go ahead and pass you the mic.
All right, thank you very much. Let me just share the presentation here. Give me 1 second while it loads. Jen, thanks everybody for joining. Hopefully we have some good conversation discourse on this. If you have any questions, feel free to type them in the chat. Myself or someone else will be able to answer that or bring it to my attention. So today we're going to be talking about Roth IRAs and IULs. And I just want to point out first that the word "and" is there and it's not a versus. This is not a one product is better than the other type of situation. There can be a need for both. This is really just to show you how an IUL can help alongside a Roth or help a person that may not be able to fund a Roth for as much as they would like, which does bring us to that agenda. We're going to talk about the Roth feature and IRA features and benefits, and IUL features, benefits, and of course drawbacks of both. Do a comparison of the concepts and then end on kind of a which to sell. Now, before we even get into that, we're going to try to figure out what type of client is this information even going to be for. It's going to be for your high income earners. mostly ones with that modified adjusted gross income over 150K, because that's when they start phasing out of being able to contribute into a Roth IRA through traditional means. Or someone that's a high income earner but has already met their max contribution amount and they still have money to put away for retirement. So let's say they've maxed out their 7K or 8K, depending on their age, of Roth IRA contributions, and they have more money. This is another alternative for them to be able to fund for their retirement alongside a Roth. And the client needs to understand market risks. While a Roth IRA is going to generally be tied to market assets, an IUL is not directly tied to the market, but through its interesting strategy, does have, at least in concept, a market component. So the client does need to understand that, there are going to be ups and downs in both these products to various degrees, so that it's something that they understand. One thing in particular about especially the IRL, that they're going to be able to make steady contributions. We'll touch on that more a little later, but an IUL is a structured payment product. So we want to make sure that the client doesn't just have one lump sum that they can put in, that they're able to kind of fund the product throughout the life, like they would fund every year their retirement account. So we're going to start by talking about Roth IRAs. You're going to get tax-free growth and tax-free withdrawals. You do have the potential for skyrocket returns. Now, because it is an actual market-based asset, depending on what components you put in under the Roth, because you can put mutual funds up to actual just picking stocks. You have that full upside potential on that. The Roth IRA doesn't have a mandatory minimum distribution, so no RMD on it, unlike other types of IRAs. So they're able to postpone that withdrawal to whenever, if they even need it. It does have a beneficiary rollover, so it's not a use it or lose it. There is something to pass on. There are no required payments. Client has not funded a Roth yet. That's great. If they want to fund for 3 years and then not fund it again, that's great too. There's no requirement for those payments to be met. And it does give market exposure. I put this under a benefit as opposed to a drawback, because the client wants that full exposure to a market. The Roth IRA will be able to help them get that exposure. So some of the drawbacks, though: contribution limits. This is where I was talking about, especially for those high income earners or those medium to high income earners. They're only able to put 7 or 8K a year, depending on their age, into the Roth. And if they have $15,000 that they want to spend towards retirement, they're kind of capped out in what they're able to contribute into a Roth IRA. Oops, apologize for that. Apparently I hit the wrong button to stop sharing. Bear with me. That was a little bit embarrassing. Income restrictions. So under 150,000, they can put that full 7 or 8K. Between 150 and 165, they're only limited to partial contributions. And if they make over 165,000, they're not able to traditionally contribute to a Roth IRA. There are some backdoor strategies that the client can use, but for a particular like I want to fund it in a normal way, they're kind of cut off once they earn over a certain amount. And that's why we want to target those higher income clients with an IUL as an alternative, because it doesn't have those same income restrictions. It does use after-tax dollars versus like a 401k or other types of IRAs where they'll get a tax deduction, and it may suffer huge losses. So that goes back to that market exposure you see under the features and benefits column, of the fact that it is true market exposure, which means that it can suffer big downturns. And it does have limited withdrawals prior to 59.5. There are some exceptions, certain first-time home buyers, of course, cost basis, but to actually start funding income to yourself that you would normally want as a retirement strategy, you are limited to 59.5 or older for that. So an IUL in comparison, same tax-free growth and tax-free withdrawals when structured correctly, which every IUL that you're going to illustrate is going to be structured as such. Basically, you don't want the policy to lapse. You do get an added death benefit protection. So the beneficiary that we talked about on the Roth IRA is basically going to be whatever's in the account versus an IUL that does have that kind of death benefit feature built on top of the living benefit that they'll have as cash value within that policy. There are no contribution limits. I will caveat saying that if a client's saying that they want to put $20,000 a year for 20 years, they are going to need to put that 20,000 in, but we're not capping them out at 7 or 8K per year. This is really the sky's the limit for what they're able to contribute to the policy over that structured time without any type of restrictions. And it does have principal protection. I will caveat this as well, is that there are fees associated with the policy, but since it's not actually tied to the market, this is that zero is your hero thing that you'll often hear. In those 0 or negative years, you're not actually losing money on your balance other than the death benefit fees and such associated with the policy. So if the market has another 2008, 2009 40 points down, client's not suffering that huge loss of principal. They're still going to keep that nest egg there, and then when the market turns around, it'll start growing again. And then it is following that index structure. So it doesn't have direct market exposure, but it does allow them to participate in the market. So that once again helps provide some of that growth, but also helps limit some of that risk as having true exposure to the market like the Roth IRA does. So as we said, there are structured payments into the policy. If the client's saying they want to put in $20,000 for 20 years, that's how the policy is going to be structured. There are some little limitations. Sometimes you have catch-up features if they miss a payment, but generally you're only going to want to show an IUL to somebody and present it in a way that they are feeling comfortable to fund for the future at those type of amounts. It does have early year surrender charges. An IUL is not a thing that you're going to put money in and expect to receive large sums of money 3 years down the road. Those early years do have surrender charges on the vast majority of policies. So this really is a long-term investment. But if you're talking to your clients about retirement, that long-term time horizon matches the way that an IUL will perform. So those short-term surrender charges, they're there, but that's not really a sticking point because that's not when they want to access the money. It does use after-tax dollars, just like the Roth IRA does. It does have death benefit related fees. This is still a life insurance product. As such, it still has life insurance fees. That's what offers that death benefit protection on the front side. That does have a cost associated with it, and the client does pay that, which means that those dollars aren't directly growing. But as you'll see when we compare some numbers, it actually doesn't have as much of a drag on the policy as one might think. And lastly, it does offer more predictable returns. So unlike direct market exposure, you're not going to get those swing highs and swing lows that you might see in a market exposed product. You're going to get those more predictable returns. I like to think of an IUL as a bond alternative where you're going to get solid, predictable returns. You're not going to hit home runs. It's a bunch of singles, but you're going to continually do it. You're not going to get in any of those real strikeouts like you would in market exposure, which a lot of clients, especially when they're talking about their retirement nest egg, do like that predictable nature. I did put it as a drawback because it isn't going to get those, high numbers that people want, 30, 40% returns. But to be honest, most people would rather take a solid 6 or 7% every year than have the risk of losing some assets. So now we're going to talk a little bit of numbers. We're going to stay on this for a couple minutes. I will set the stage. This is going to be a 50-year-old male. We're going to assume healthy. We did illustrate at second best risk class. A lot of 50-year-olds are still getting that best risk class, those ultras, the premium risk classes. But to kind of give a fair comparison, we're doing second best. They're doing that 8K a year for 19 years. I chose 8,000 because at 50, that is the maximum amount that you can contribute into a Roth IRA. So to kind of compare an apples to apples, I match the IUL to that. Once again, the IUL can do much more than that 8K, but if we're looking at what would happen with that first 8,000, this gives you that comparison. And the Roth IRA was calculated at a 6.5% return every year with 1% fees. So the initial death benefit, and this once again plays in the favor of an IUL as a Roth IRA alternative, or in conjunction with the Roth IRA. You're getting that 103,000 of death benefit, whereas the Roth IRA, you're basically getting in exactly what you put in. The client puts in 8,000 and they pass 3 months later. What's passing on is that 8,000, where the same scenario with the IUL, they're actually going to have a death benefit to pass on. Death benefit at 68, which is that last year that contributions are being made, you're going to see that the IUL still has a higher death benefit, 373,000 versus the 269. It still has roughly that 104,000 initial death benefit difference, because the two products have grown relatively the same, kind of under the hood over that time frame. The client's still going to enjoy that additional death benefit protection that the IUL gave. The cash value you'll see at age 68, in this particular example, the IUL slightly beat it. These numbers on most cases you're going to do are going to be similarly close. $1,000 when you're talking about $270,000 is a small percentage. So they're roughly in line with each other when income starts. So we're going to show income for 20 years, which is your typical income solve on an IUL. And that income showed 24,493. So we're going to take the same amount out of the Roth every year. What you'll notice as a difference is over that 20 years, there's $489,860 of total income that was paid on the IUL. That's income for all 20 years, with only $381,000. And the reason for that is the full income stops at age 83 for the Roth IRA, with 13,000, a little over 13,000, almost 14 for that final distribution. And then the account is drained to zero. Now, one of the reasons for that is the way that crediting and the structure of an IUL versus the Roth IRA works. Simple terms, I'm not trying to speak down everybody, but the way that the Roth IRA works is if you have a savings account and you put $100 in, you take $50 out, your new balance is $50, your growth is only going to be on that $50. The way that an IUL works is if you have $100 in your account, you take $50 out, you're actually loaning that $50 out. So when crediting happens, it's still going to credit at the full $100, even though you've taken $50 out of the policy as a loan. Now, there is loan interest and there is some drag on the loan, but you'll see that even with that, the fact that it's still crediting that full amount and gaining growth on that full kind of nest egg, even though loans have been taken out, you'll see that it actually is able to have income for longer and be able to provide a better benefit for the client in that income solve. You will see that at age 89, which is after that 20 years of distributions, there's still $42,000 of death benefit for the client, meaning that even after their income years are done and they're, they pass at that point, there's still a death benefit to pass on, whereas the Roth had already drained itself at 83. And like I said, the reason for that is this is the S&P historical returns. You'll see that overall, lots of green years, but you'll notice that there's a lot of negative years as well, including a couple that almost reached 40%. And it's the fact that this happens that an IUL can be a attractive alternative. When we're talking about that market exposure, if you put your money into a Roth IRA and you get 2 or 3 of those down years in a row, especially at retirement age, that can seriously drain that account. Now, granted, if it's nothing but a bull market for the next 20 years, it's going to outperform an IUL, but how likely is that to happen? Whereas an IUL, you're not going to suffer those huge downsides. You're also not going to get that 20% return on the upside, but you're going to get that stable growth. And when you're talking to clients about what their needs are, you're going to need to talk through kind of what is their long-term growth, what type of exposure do they want to have, are they good with high swings, high lows, do they want more predictable returns, are they able to even to fund a Roth fully? That's where we go to that IUL and really can offer an alternative or a addition to their Roth IRA to allow for more funding dollars for that retirement journey. So we're going to end, like I said, this is going to be a quick kind of presentation on which to sell when. And the answer is both. It's one of these things where they both serve the same purpose of providing that income in retirement years. They just both go about it a different way, and it's really going to be up to that individual client, what they're able to contribute, what they're looking for, what their risk tolerance is. If there's an insurance need where that added death benefit protection will help them as well on kind of which one to sell when. I would suggest that, as with any good financial advice, don't put all your eggs in one basket. Spread it out between these different products, and that's the conversation you should be having with these high income earners of like, hey, listen, we have other means of creating that nest egg that's going to grow on a tax-free basis, that's going to allow for that income, have that extra death benefit protection above them having to try to, buy real estate or do something else, where they can kind of get those more predictable results, and that's going to be through your IUL. So that is what I have for you. Like I said, I like to keep it quick, but we do have plenty of time for questions, comments, anything that anyone has. I'm not sure if any have been in the chat yet, but happy to answer anything anyone has now.
Awesome. Starting question, Matthew, can you explain caps and par?
Sure. So the way that an IUL works, I will try not to go super deep into it. When you purchase an IUL, the insurance company is going to take a portion of that money and buy options with. So the option is going to have a cap on what it can return, and the participation rate is going to be how much of that market you're going to participate in. So if you're indexing the S&P 500 and you have 115% participation rate, you're going to get 115% of the results of the S&P 500 up to a set cap. So if the S&P returns 5% and your cap is 10%, you'll get that 5%. If your participation rate is 200, you'll get 10%. But once again, that cap rate is going to cap that performance. If the S&P returns 30 points, you're going to be capped at that 10%. But that's where the fact that they're using options and not actually directly invested in the market. If the S&P returns negative 20 points, you're going to be at those minimum guarantee levels, whether it's 0, 25 bips or whatever it is within the contract. And you're not actually losing that principal in the market as well.
Cool. Next question, Matthew, can you talk to us a little bit about IUL products that Penny has or that you're a fan of?
Sure. So there is a lot of your IUL carriers that we have out there. Each are going to be slightly different. Your Corebridge, your Securian, your F&G, your NLG, Transamerica. Really, any of the major carriers, we're going to be able to quote and show, and it's really going to be a preference on what it is that the client wants, some of those extra bells and whistles. I'm really a fan, and this is not every client will be different. A fan of Corebridge, F&G, Lincoln. They all have really good products. What I try to look for in an IUL is how they treat the in-force block, and try to make sure I stick with carriers that are able to consistently, have those high cap and participation rates on both their new and in-force business.
I also just want to add, I've been in the business for growing agencies for a long time, and two of my favorites that Penny has access to at very, very high comp levels, Fidelity and Guarantee, which was mentioned in Mutual of Omaha, Income Advantage IUL. And part of the reason why I like Fidelity and Guarantee specifically, I know several of you guys are agencies or are in BGAs. Fidelity and Guarantee allows for you to contract multiple downlines at 5-point increments underneath you, and so feasibly you can have several different downline agencies underneath you. Most carriers will only allow 3 to 4 tiers of hierarchies, if that. So I think that's really special. I find their case management team to be super easy to work with, and they treat their in-force block pretty well. And then Mutual of Omaha, when I talk to people about it, they just feel that it's a simple IUL that's easy to understand and easy to sell and has good accumulation features. I also want to point out that we have a couple of different IUL analyses that are available. We did a really cool one on Corebridge, the protection IUL versus the accumulation IUL, and it has examples of illustrations and quotes and things like that. So if you want to see how that looks like, you can request that information from Matthew, and he is going to be able to give that to you. Another question, Matthew, is, are there any penalties for early withdrawals from either an IUL or a Roth IRA?
So one of the benefits, thanks for that question, for the IUL is that you're able to withdraw at any point in time. Your Roth IRA is going to have some withdrawal penalties prior to age 59 and a half. There are some exceptions to that, like first-time home buyers in there. So there are some carve-outs, but for the vast majority of people, that, especially the ones that you're most likely going to be talking to about these two together, are not going to be able to avoid that that penalty for early withdrawals. There's no mandatory minimum distribution, but the Roth IRA is a retirement product, so it's expecting someone to be over 59 and a half before you can get the money without any penalties. Whereas the IUL, you could sell it, and then 5 years later you can withdraw with no penalties. Granted, it's not going to be as much growth as we're showing here, but there's no penalty for a withdrawal at any point during the life of the IUL.
So for those of you guys who are listening, I always want you to think about like the I got a guy situation. So obviously a high income earner, if you're talking to a high income earner, that's a good candidate for an IUL. You should get an illustration from the Penny team. But also, like, they don't have to be super close to retirement. If they're in their 40s, for example, that's a pretty sweet spot for IUL sales. You could kind of tell them that with IULs, there's flexibility on getting those policy loans, so that if somebody wants to buy another house or help fund their children's college or whatever, you could use the money for those things without getting that tax penalty. Whereas with various securities products, including Roth IRAs, you're going to be held accountable to those penalties, or you can't withdraw until 59 and a half. I think that's a really, really Great point. So if you guys have anybody who is making decent money, putting money into their brokerage accounts, and they're, of that age range, 35 to let's call it 50, that's somebody that you guys should bring it to us, because we can help you illustrate the case and we'll help you sell the case as well.
And that's you mentioned on another thing there quickly. An IUL, you don't need a securities license for. Now, technically, you don't need a securities license to open up a Roth IRA, but for the vast majority of items you're going to put in under it, you are going to need a security license to kind of pick what the Roth IRA is doing. So, using an IUL, it's not any extra licensing other than the life license. So that's definitely a feature for it, is that you don't have to have that securities license to really present the full solution, where you would want a securities license if you were presenting in a Roth IRA.
Cool. We got 2 more questions. I want to shout out to Ajane, who is always on our webinars. I love to see familiar names. Ajane says, are there carrier designs or riders particularly beneficial for educators, such as critical illness, long-term care, waiver of premium during sabbatical leave?
So for pretty much every IUL, there's going to be a waiver of premium option, as long as they're within those age range. But if they're an educator and they're still working, they normally fall within those parameters. The vast majority have some type of critical illness rider either automatically built into the product or available. And then there are some long-term care riders that can be added either through themselves or through a hybrid policy. So the way that an IUL works is, we were talking, and I know Shawana talked about college or house. The way that it works is, we're talking retirement, but really that money is a living benefit to be able to use whenever. And since it is a life insurance product, it does have those extra features, as well as having that waiver of premium to fund the policy if they are on a qualified event, critical illness to be able to accelerate a portion of their death benefit if they find themselves in that situation. So because it's on a life insurance platform, it has all those extra features that aren't necessarily available on your traditional IRA product, where that's just market exposure and leaving at whatever that account balance is as a beneficiary. You're not getting some of those living benefits that you would as you would in an IUL.
For LTC specifically, Ajane, Securian is a cool carrier for that. They have a lot of great riders, that some of the ones that you named. And then a really weird rider that I really love, especially if you're selling to a young family, maybe 30s, 40s, especially, the mother here. NLG has a fertility journey rider. So it's like a living benefit that is designed to help assist with fertility. Nobody else in the industry does something like that. So if you're talking to a family and they're interested in that, we can help you with that. And we do have that carrier as well.
And that goes back to us having access to multiple carriers and what fits for that client's need. When you're presenting a client to us, we're not just going to say, this is the carrier to use every time, all the time. We're going to take a look at the particular client's needs, their kind of full profile, and what it is that they're looking for, and then suggest that correct product that will have those extra features that they might need in order to help benefit them or to make that sale. And having access to the amount of carriers we do and such a broad range of carriers allows us to kind of customize that solution to what they're looking for. I think Chris also asked, can an IUL complement a Roth IRA, or should you choose one over the other? I would say this is more of a case of an and versus an or. While you can choose one over the other, this is not this one is better than that one. It really is about what is it that they're looking for. And for the type of clients that we're particularly targeting with today's presentation, they're going to kind of phase themselves out of those contribution limits to a Roth IRA, and they're looking for to be able to put more money into a retirement account, or they earn so much that they're unable to naturally contribute to that retirement account. So it is, I think, more of an and, although for some clients it is the option because they've already exhausted the other options that they may have.
And I would say that's our last question.
Okay.
Before we leave, I just want to make sure that I let everybody know, if you have a client that's 30s, 40s, 50s, and they're putting money into some sort of brokerage account and you're going to talk to them, come to us first, because let's say you don't know how to do an IUL, we'll do your illustration, we'll explain everything to you, we'll tell you what to say. That's going to be a really, really good experience. And if you are experienced, our back office will do everything for you, from the case management to taking down the app, actually taking down the app for you, all the way to walking your client through delivery. That's the whole reason you work with Penny. So we have an extremely knowledgeable group of people, but the back end support is unlike any other. So my recommendation for you guys today is talk to your clients. If you have somebody that you think is a good fit for an IUL, bring that to Matthew and we will help you with the case. With that said, probably within 24 hours of this, you guys will get a message via email with a copy of this recording and any other materials. And make sure you guys are on our email list, because we're going to have scripts that are going to help you sell IULs, and there will be more content coming forward. I want to thank you guys all for attending today. And Matthew, thank you so much for explaining all this. I think you did a really good job. Matthew, if you have any last words here.
I think the thing just to remember with all this is that, just like everything else, when you're talking to your clients, it's a journey about figuring out what it is that they need, and don't pigeonhole yourself with this one solution. The reason why you work with a brokerage like us is that there are multiple ways to kind of tackle the same thing, whether that's funding a Roth IRA, funding an educational account. Johnny had talked about living benefits. Bring those situations to us because there's maybe a way or a concept or an idea that you are unfamiliar with or know that you have access to that we can help you with. Above and beyond kind of just this presentation, there's many different kind of ways to tackle the same thing, and that's what we're here to help you with.
Perfect. Thank you guys so much. We will talk to you soon. I'll see you next week for our next webinar. Have a great one.
Thanks, everybody.